So what's up YouTube and welcome to the channel. So today I'm just going to tell you guys about the discovery that I have just made, and I've used this particular strategy in trading both the synthetic market and the forex market, and I'm going to show you how this strategy can be applied in the live market by showing the trade I took in V51S. So this is the schematic. I'm just going to explain the psychology or the reason behind this schematic or the structure or diagram, as you can see. So here we are looking for two candles, okay, two types of candles. We have the normal engulfing candle like this, with the first candle having a wick just like this, and this other type, this is, that's a type A. I call this the inside bar, the inside rejection, sorry. I call this the inside rejection candle and the rejection candle. So these are like two types of rejections. The one that happen inside of the candle, like if you have a candle obviously coming from this part portion, right? And then rejection inside of this one and this one. So that's why I just name it the inside rejection candle and the normal rejection candle that we all know. Now, the idea, um, the idea of this strategy is to find a candle that has this rejection to build your daily bias rate, and you will see it happen every day in the market. Okay, this is different from what I've ever thought. You'll never see anybody analyze the market in this way. You will never see anybody analyze the market in this way. Okay, so the conditions to trade this system is to look for a candle that forms like this. Okay, yes, you see them in multiple time frames, but how do you identify the one that will tell you the direction for that day? This I'm going to explain with a live example of the trade I took today on V51S. Right, so this is the inside rejection. The idea is when the market opened, this is a bearish day or a bearish candle. When the market opened, is sold to the downside. Right, sorry, I think this is the open. Yeah. So when the market opened, is sold to the downside, created this peak, and then push up to this high, rejected the high, and closed in this point. So this is something that we have more like a pin bar, right? And then the next candle opened, supposed to open where it closed, opened here, right? And then we had this sort of candle, right? So it could be in this format, it could be in this format, and it could also be as a engulfing candle, right? So it could be in this format. It can also be in this format also, right? It can also be in this format also, right? One, two. Okay, so it could be in this format. It could be also as a engulfing candle, right? Alright. So the idea is this, or let me just do that of an engulfing candle. So we have um open here, closed here, rejection, right? Rejection, right? So this idea is the market opened here and then moved to the upside and came down, created this long wick rejection, and close down here. We created this low and then close down here. Okay, that is for this particular scenario. Then the next, yes, then the next candle opened here, right? Went down to create the wick, right? And then push and close here. Okay, so it could be any of this, but it's just about the understanding of the open, close, high, and low, right? So for this example, I'll just adjust it to this. If you want it to be like this, it's still the same. The idea still is still the same. Okay, so when we have the market creating this rejection, we would, when the next candle like this one close close above that rejection, it indicates a bullish day. Okay? A bullish day, meaning that when this next candle, when the next candle that will form here opens, it should come back, create a wick like this, and then close like this. Okay, so this is a bullish day, so we would focus on trading this particular candle. All right, we focus on trading this particular candle. So likewise, the same thing here. So when the market opens from here, right, would it will come down into this rejection area and then close just like this. Okay, so we are buying on this particular day. Now, inside of this rejection candle, okay, we need to, the conditions to it, or the condition to trade this particular setup, we need to see a break of structure, okay, after the formation of this rejection candle. So we have to highlight it in a way that we only see the area of that rejection, right? Meaning that wherever the market closed, from that point to the high of that rejection candle is where we want to highlight and then find our break of structure, okay, above it. Okay, when the break of structure is above it, that is where we now find the inducement or liquidity point and then look for the closest key point of interest. So I'll be using two types of key levels. I'll use the V-shaped key level for my area of interest, okay, or for my key level. I'll use the open close, and then I'll also use the A shape. So it depends on which particular key level is present, okay, but I prefer to use the one that is closer to liquidity. Okay, it could be the A shape, it could be the open close level. All right, so that is the idea about this strategy. Okay, it's a very simple strategy. All right, so now let's go into today's price action. Okay, so now you see B51S is moving crazy, moving crazy. Okay, before I started this video, we've not had this crazy dump here. We've not had that dump, but now you can see we've smashed our final take profits here. Right there for $58. If you're using 0.01, this is $58 profit. Then if you are using 0.005, you divide it by 2, that 58 divided by 2, okay, you get the amount you make here. So yeah, this is the setup that I took today, right, all right. So I'm going to clear my chart. I'm going to just clear this and clear this. Alright, and then I'll start my analysis from the daily time frame. Okay, now on the daily time frame, what can we observe? Right, we can see that we have this um inside rejection candle, but this is very far from where we want to look at our price action from. So our price action should not be too far from the current candle. Okay, so my only focus here is in two areas. Okay, this one, right? This one, this particular one here. Okay, this particular one here. This, or I may decide not to use this. I may decide not to use this, but then go to a lower time frame and look for my area. Okay, like the 4 hour time frame. I'm going to see the area that's focused on. Okay, but then let's leave this. Let's leave this rejection. Now, why am I picking this rejection? Is because this is an inside rejection. We have this, we have this, and then we have this bullish engulfing candle. Okay, so is the same thing as you identifying this. Okay, I don't know if anybody will disagree with me. Okay, this two candle. This is like 24 hours, 1 day, right? This two candle is 2 days, right? And then this one and this one, this particular one, let me take it back. This particular one is a 1 day candle. This candle and this candle is 2 days candle. This candle and this candle is 2 days candle. Okay, so on this day and these days, these 2 days, we have, let me draw how it's supposed to be. So it's supposed to be something like this. Okay, where this is supposed to be the first candle, the first two candles, and then the second two candle will be in this form. Okay, see where we stopped, and then you see the rejection. So we stop here, right here, right? We stop right there, open, close, right there. So it's going to be from here, then with one long wick. Okay, with one long wick at the top. Okay, which is the same thing, which is the same thing that I showed here when I was explaining this particular one. So this is an inside rejection, right? This is a rejection and a rejection. So both of them are happening inside of this long candle to the downside. You just need to understand candlestick. If you don't understand candlestick, you cannot even learn anything. Okay, it is very important to understand candlestick. I would just advise you to go and learn candlestick. Okay, so is this 2 days, right? 2 days, because this is 24 hours, so 1 day, each of these candles signify 1 day, but then I'm combining two candles to make 2 days, 2 days, right? So this one from here to here is the second day's candle. From here to here is another second day. From here to here is another second day. So today and yesterday and today's candle that is forming here, so I'm from here to finish give us another candle. So from here to here will give us our inside rejection. Okay, referencing to this point, inside rejection. So we need to see price coming inside of it after we've had a big push. Okay, for this is a bearish scenario. I wish I could invert this. Okay, this is a bearish scenario. I explained that in a bullish scenario. This is a bearish scenario. When I go to a lower time frame, let's say, let me just go to the 4 hour time frame. 4 hour time frame. Okay, 4 hour time frame. I will invert this chart so you understand what I'm driving at, okay, using this. So if I invert the chart, if I invert the chart, let me see. If I invert this chart, if I invert this chart, come on chart, let's invert scale. So now this is the inversion, yeah. So this is that rejection candle that I was talking about. This is the rejection to the upside, and then we've covered this. So it will now be, oh okay, I'm explaining this one. So this is the rejection, then this is that rejection here. We've covered this, and then we need to have that pullback into this zone before we take the sell to the downside. So our break of structure will be from here. We'll have the break of structure, the liquidity, and then the entry, or we'll just have break of structure point of it, then key level, and then we'll then have the entry. So I'll return the chart back. So it happened on it happened today, but on a bearish scenario. Okay, I think I'll just look for one of the price actions here and do a bullish scenario for you guys to see. Okay, so you can see that we have this, right. So this is that area, right. Inside that area we need to see a break of structure, right. So this is our break of structure to the downside. Then when it comes to key level, I'm using A shape and V shape as my key levels, right. So this is a 4 hour time frame. Now you can see that we have a break of structure of this zone, right. So our key level should be this. Okay, for those of you that know how to trade um, MSNR, you understand why I chose this as key level, right. This is a QM. A QM is valid when we have an impulse move, a voluminous move down and voluminous rejection move to the upside. So a QM becomes a very valid and strong key level to be considered when taking trade on a key level. Okay, so this particular zone is very valid to take your self trade from. Okay, you see, just two time frame, the daily 4 hours. In the 4 hours, we find our break of structure, we find our key level, and then we enter. So 4 hours, you have just take this straight and move, right. Now if you're a small account holder, this will work, but then if you have a small account, and then like me, I have a very small account, so I try to make sure that my entries are more refined, okay, to cover for the kind of account I'm trading, right. So this is a 4 hour setup, but then I can reduce this 4 hour setup to like a 15-minute setup, okay, where I can now do the same thing that I did on the daily time frame, right. I can now use this is a 4 hour rejection, inside rejection candle. Okay, you can agree with me because we have this push rejection, then we have the inside rejection, and then on this inside rejection we can go to 1 hour. So on the 1 hour we look for a break of structure. Let's see if we have that. No, we don't have that. We are still identifying that inside rejection candle. Okay, so the best time frame that will give us that break of structure is the 15-minute time frame. So if we use the 15-minute time frame, we should be able to see our break of structure and our key level, right. So it is like that. You see, we have a break of structure here, just like what we had on the 4 hour time frame. So break of structure here, right. Our key level, is here, right. This is an open close. So I normally pick the closure. This is the open, the closure of the candle, and then extend it. You see, we have our key level, we have our break of structure. Then we have this engineered liquidity. So if you want to identify them, these are engineered liquidity. So you see people selling from here, you see multiple people selling from here, and they get induced, right? You sell from here, give you small profit, kicked you out. You sold from here, gave you small profit, kicked you out. Till price came to the right zone before you now see that massive dump to the downside, right? So this is a very simple, straightforward strategy that I discovered, right? So it is more easy than the garbage. Let's say it's more simple. It's a simple approach. Okay, more simple than the many plenty grammar trading strategy that you've been used to. Okay, so you can reach highest $10 on this. Okay, $10 on this. So if you reach $10 and then you make $58 like that. Okay, so this the trade I took today. The trade I took today on V51S. So let me show you a buy example for hours. Right. So that's the sell example. Let me just show you guys buy example. Alright. So okay. For this buy example, let's look at this day. Right. The day before this day. Okay, we have this rejection candle. Right. We have this rejection candle. And then it was now this one I can walk through this, but it's not part of the schematic that I drew. I can trade this because I understand this particular kind of candle rejection. Okay. So you see we had a bullish engulfing before this day, and then when the market open we close here, create this wick up and create this wick down. Now if I am to trade, this will be my target for take profits, right? So this will have been my target. Now this will now be my rejection candle, right? So I'm just doing it for insight because I don't know, I was not there. It's like I cannot replay. If I could replay, I would have shown you guys. So if I go to 4 hour, right? If I go to 4 hour, you see the 4 hour time frame and the daily time frame and the 4 hour time frame are aligned. So I'll still use I'll still use this 4 hours zone, right? I'll still use this 4 hours zone. Let me see. Yeah, so they are aligned. I'll still use this 4 hours zone. Okay, I'll still use this 4 hours zone. Now this is the rejection on the 4 hour. So on the 1 hour, I'm supposed to have what my break of structure and my key level. Okay. Now on the 1 hour, is there a break of structure? Yes, there is. This is the high. This was the high that led to this low. I gave us this rejection. So there's a break of structure of this high, as you can see right there. And then where would our entry be? Okay, where would our entry be? So we have this open close, but I can still refine it to 15-minute time frame. Right, we have that open close. Can also use if you see the open close here, so we have that open close and say see the QM. The open close the QM is right here. You see. Now remember what I said about QMs. They are very powerful when you see volume, when two candles are moving strong volume. You see. So we have the entry here on that on the next day, which is the price action that we are analyzing. Then remember the take profit is here. So we just shift that. So this is our take profit. So you have just had, remember our break of structure, right? So since we've come, this was the 1 hour break of structure that we saw, right? But since we came to the 15-minute time frame, uh, you can use this as your break of structure right here. So is a very simple strategy. It's a very simple strategy, and it works. It has a very good win rate. Very, very good one. You so we had that we have our engineered liquidity here. I always like engineered liquidity zones because that's where you have your CRT. Okay, so you see how CRTs have been formed. Yeah, this is your CRT. This is the low. This is the high. See, so you can just take an entry here. So I'm like teaching you how to catch that turtle soup on CRT. I don't want to talk much about it. So you can see that this strategy is the building block to it. So you have a break, you have a total engineered liquidity or inducement. Then you see the inducement pushed, gave a lot of people happiness here. Then took it away from them. Then gave us our entry because this is where we were waiting patiently to take the trade. So we risk $10 and then we make 50 something dollars or more. So this $78, that is the rate 0.01 on this particular stock. You can take this away. So this is how you would have caught a buy. Okay, so this is for buys, right? This is for buys on that particular day, and then this is for sales. Right? It is a very simple strategy, very very simple strategy. Doesn't require so much. Just requires you to understand or you able to understand candlestick, able to identify your rejection candles. Okay, it actually tells you the direction. It builds direction for a particular day and gives you entry and exit for that particular day. So this is new. Okay, nobody has talked about rejection candles. Okay, inside rejection candle and normal rejection candle. Nobody talk about it, and people don't even know how powerful it is. You see that each trade you take will be snipers, like sniper entries. Okay, you can see it here. Alright, so you guys should just support me. Okay, support me. I spend a lot of time on this chart. I spend a lot of time to gain knowledge, to understand this market, to develop strategies that will work for me in the future. Okay, when the money comes. Alright, but for now, I just keep learning. Alright, I'll see you guys in my next video. This is golden, guys. Don't play with this strategy. Just watch this video, watch and watch and watch till you understand the concept. Then you apply it, you see the result. Although I have another strategy that I discovered that has to do with mathematics. That I said I wasn't going to show on YouTube because you can never find it on YouTube. Nobody's talking about it on YouTube. Unless I did a video once using 25s, 25, use 25 to explain that strategy. It's on my YouTube. You can go search for it there. I don't talk much about it because it's not popular, and I understand why it's not popular. So this one will help you guys. It has a good win rate, 90% or 80% win rate if you apply them correctly. Okay, if you just follow the steps, like step one, identify your rejection candle. Step two, move to a lower time frame. So I use 3 time frames, 4 hours. I use 3 time frames. I use the daily. I use daily. I use the daily time frame. I use the daily time frame. 1 day. I use 1 day. I use 4 hours. Then I use 15 minutes. So these time frames that I use basically is just for identifying those um, key levels, right? Identifying those key levels and then framing my setup from there. This is a very simple approach. Yeah, I'm gonna see you guys later. Peace.